Good afternoon, everyone. Welcome to my channel once again. My name is Seyi, and I love to go by the name God did. So, in today's video, we're going to continue our series, the Beginners Trading Series, and where you'll be learning all that it is about trading and the fundamentals, both the technicals and the fundamentals. So, we've started this series some weeks back now. There's some videos already done. So this is a continuation of them. So if you've not seen the video, if you're new here or you've not seen any of those videos, you can do well to go back to the channel and watch those videos. They are quite important for you to understand some of the things I'll be saying on this particular video. They're not so long, they're about 20 minutes, so you can do well and enjoy. Alright, so in today's video, we're going to be talking about understanding trading charts. Right, it's not going to be a boring video at all. Yeah, we're going to be doing a lot of talking, yes, but also going to be explaining some things that you can currently see on my screen. So understand trading charts, and like I said in a particular video, I think the video that talks about trading being a skill, I said like every other skill, you get to learn, you get to unlearn, you get to improve, you get to update, you get to hear, oh guys, any information about this skill, this is a faster way you can do this thing. Trading is somewhat like that. So if you approach trading in that manner, I'm sure, I bet you're on a good start. Do you get what I'm saying? I hope I'm not too fast. Alright, so exactly, I said trading is a skill, and pick up any skill. I mean, coding, cooking, driving. You want to learn how to drive, that's a skill on its own. You can't tell me you want to learn how to drive now and you don't know how to read the dashboard in the car rather. You don't know when the fuel is down, you don't know when the speedometer is more than enough and all that. Yeah, you've got to be able to read those things. It's not just that, oh, you know the steering and all that. You've got to be able to read those, let me call them images inside the car. So that's what we're going to be doing in today's video. As much as yes, you can learn how to pick a trade, know where the trade is going to, you've got to know exactly all that you can see. And this particular scheme is TradingView. So TradingView is the most popular platform for analysis. Analysis means where you analyze a trade, basic English. Right, so do not forget, trading is a skill, and in today's lesson, we're going to be understanding the chart. So I'm going to be explaining everything you are seeing right here on this particular chart, because as you go forward, you're going to be using TradingView to analyze your charts, to also pick your trades, but to execute your trades is a different platform entirely called MetaTrader 5. Alright, so quick one. Basically, what is a trading chart? It's exactly what you're going to see on this particular screen, and it basically shows you price movement. Price movement means the change in price. For instance, it's more like a graph, right? So each place rather here shows you where price is or was rather at a particular point in time. What do I mean? Now on the right hand side, this particular, follow my cursor, on the right hand side there are different prices, right? This is 1.344. If you zoom out, it shows you the inside prices, right? As you can see. So at each point shows you each price and shows you the change of price. Now what is the current price of this particular chart? The current price, this place is particularly showing us that the price is currently at this point, this green line I'm tracing, showing us that the price is currently at that point. Each and every one of these, we call them candles, I'll get into that later, shows us that price was at a particular point at a particular time. Now where do I see the time? If you look beneath the chart, you'll see Tuesday 14th of July 2026 1 a.m. Now the time is currently, today is July 15th 2026, 11 past 1. Now this particular candle is showing us that time range, right? I'll also explain timing. I just want to know, on this particular chart, what can we currently see? You can see something like a graph, right? Okay, let me give an example of something. Let me assume that the price of, let's say, milk changes over time, right? Let me use this page. Let's say the price of milk changes over time, and we have a graph like this. I think we all did graph in math while growing up, right? I have a graph like this, and everywhere here how do I do this? Alright, let me assume that each line here is for the price. Right. I just want to show you how this graph is formed. I'm calling them graphs so that you can easily relate. So let me assume that each place here is price. I mean, this vertical line here is the price, while this particular line here is the day, right? So how does this form? It means basically, you know your graph. If the price was once, let me assume this is 100, 150, 200, 250. Now, let me say today Monday the price was 150. It means there would be a particular I'm going to use the word candle. I'm sure you can relate. The candle will stay at 250. Right. The candle, let me use another thing as candle. The candle starts at 250. Now it's currently at 250. Let me change the color. Right. This is 250. Now, another day, let me assume the price now falls down back to 100. What will the price be? Let me say this is Monday. Tuesday, the price now is 100. It's going to come here like this. Can you see? So the movement from year to year is what we have on this chart. So let me assume the price was this day at this particular point. The price was this at this particular day rather, and then it's this at this particular day. So basically, what the chart just shows you is price movement. You get the change of price, and that's what trading chart is basically about. Now, and in other videos, I've also shown you what you can trade. I don't think I should go over that, but I'll just do that quickly. I've shown you. I've shown you what can we trade, right? I've shown you that there are different things we can trade. We can trade stocks, we can trade funds, we can trade futures, we can trade forex, crypto, indices, bonds. There's a particular video where I did that. You can go to the channel and check that out. I think that should be what is forex trading. So we saw different things you can trade and how you can trade them. We saw the times you can trade them, right? So what else is on this chart that we can also discuss? Also in another video, like I said, it's very, very foundational that you watch those particular video because they are built up to this particular one. In another video, I mentioned currency pairs, which is on the forex market. Currency is just the currency of countries, right? That, I mean, Nigeria is naira, the US is the US dollar, the Britain is the British pound, the Japanese yen, and so on and so forth, right? So yeah, we have currency pairs also on this chart. What are the currency pairs? These particular guys that you can see right here. So this is, as you can see, this is the British pound, Japanese yen. In that particular video, I also mentioned that they are what we call base currency and cross currencies. Right, I mentioned that in base currency, that is the actual currency that is against the quote currency rather. So I mentioned all that has been explained. So that's another thing we can see on this chart. So if you've seen that video, you should be able to follow through. So what else is on this chart that I would need to explain to you? I think I've explained this particular tab here. It just shows you the different prices and the change in price at different times. Right, I've explained different kind of things we can trade. We have crypto, we have currencies. What else? All right, so another thing I would love to explain on this chart would be the time frames. So there are what we call time frames, right? Time frames means there are different times where you can take a trade in a particular day, or there are different ways you can look at the price movement. So you can look at the price movement either in a second or in an hour or in a day or in a month. Let me explain. As you can currently see, coming down to this place, I toggled on this particular tab. and don't bother yourself about the sticks. But now you can see seconds, right? This place is just to bring them to this particular point, but I don't need it, so I'm not going to bring it. I'm not going to click it as favorite. 1 second, 5 seconds, 10 seconds, 15 seconds, 30 seconds, 40 seconds. There's the 1 minute, 2 minutes. I don't use these ones. I don't know why I have it. There's the 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, 15 minutes time frame, 30 minute time frame, 45 minute time frame, 1 hour, 2 hours, 3 hours, 4 hours, a day, a week, a month, 3 months, and so on and so forth. Why is this time frame important? Don't know if I should go into explaining that yet, because it's a full topic on its own, right? It's a full topic on its own. So for instance, as you can see, this is the 1 minute time frame, 2 minutes, 3 minutes, 5 minutes, 2 hours. So what does this exactly mean for traders? This means on either of this time frame that you are on, right? You see these things that you are seeing here, we call them candles, basically, as they look like candles, right? It means that for one particular candle to be made, it took 2 hours, because I'm on a 2-hour time frame. That is why from one candle to the other, the range will be 2 hours time frame. Let me show you. Now, we've talked about the dates and also the time, right? Which is what you can see beneath the chart, this place that my cursor in. This is Wednesday, July 26, 5 a.m. So this is it. Okay, this is 5 a.m. Now, if it took 2 hours, don't mind that other one. If it took 2 hours for this particular candle to be formed, the next candle will be formed for 2 hours too. And that's why from 5 a.m. the next one will be jumping to is 7 a.m. Next one will be 9 a.m., 11 a.m. So that means on whichever time frame I'm on, each candle represents the hour or the minute or the time of that particular time frame. Don't forget, these are the time frames. Now, it is a 15 minute time frame. It means each of the candle here will take how many minutes to be formed? Yeah, you're right, 15 minutes. This particular one, look at the time. This is Monday. It's Monday, 13th of July, 2026, 2:15. Monday, 13th of July, 2:15. The next candle will be what? 2:30. Next one will be 2:45. Next one, 3:15, and so on, 15 minutes. Now, I'll go into why this is important later. Do you get? But I just want you to understand that time frames are very, very vital. That's the first thing you should get. They're very, very vital to every trader, every successful trader, obviously. And so your time frame also determines how you pick your trades, how you analyze your trade, when you decide to enter the market and how. I basically take trade with time frame. As you can currently see, even this particular trade that is running, I have a trade that is running currently. It's I'll explain that later. Let me divert now. So I've explained this particular tab. This is the time frame tab. You can choose. I basically don't use the 1 minute. I think I stop only at the 5 minutes. I don't even use the 5 minutes actively like that. 15 minutes. This 10 minutes is the premium version. 15 minutes, 30 minutes, 45 minutes, 1 hour, down to the monthly. I will explain top-down analysis, I think, at the end of this video. Alright, so what else I would love to explain in this video is the tools that we have. As you can see, you just see that, I came here and I clicked on something and I can draw anything I like on my chart, like I did the other time, right? This is what we call the toolbar. And toolbar is actually on this particular page. Definitely you can move it. For instance, when you choose the ones that you'll be using frequently, you can align them in different ways, but this is where you get to choose them, right? The toolbars are just for you to be able to pick tools that you will use. For instance, you want to draw a break of structure, a trend line like this. You come to this point, this is a trend line. You have staircase the same way. You can pick any one of these ones to use. I have these ones to use using. You would not necessarily use everything unless your style of trading accommodates it, but you get the gist. This one also, you come here, pick the ones that you need, the ones you've learned with, you asterisk them, same thing with each and every one of them here. So it's pretty much something you can easily navigate as you learn how to trade, or as you learn trading on the journey, you will know the type of tools to pick up and keep. So when you get to keep them, is the ones I get to keep are these ones. Look at my screen. These particular ones I can move right now. So they're the ones I basically use in my analysis, and that's why they're called tools. They're the ones that you'll be using to analyze. This is a break of structure. I don't know what a break of structure is yet, but just so that you can draw and map out your trading. This is a long tool, a bullish tool, and so on and so forth. All right, so what else do we have on this chart? Let me see. I think you already know you already have an idea of the currency pairs already, so there is no point explaining that. All right, so also I would love to explain type of charts that we've got. Now currently this is the candlestick chart, right? I've already explained that. As you can see, each and everything here looks like a candle. That's why they're called candlesticks. But also for some traders, the major chart pattern that is used is candlestick pattern. Some traders also use this line pattern, right? And this line pattern is just used to show the closing of price. So you are showing that price closed at this point, and it's most likely going to come back to this point to continue trade. It's the same thing you do with the candlestick. This just gives you, what would I call it now, a line pattern. Do you get? Rather than on like candlestick where you would have multiple candles, here you wouldn't have multiple lines. It's just one straight continuous line in different directions, right? That's clear. These other ones are not really popular. They are not really used like that. So it's just this two is just to show you the line chart pattern of the price movement, while this other one shows you the candlestick pattern. Easy peasy. All right, what else is on this particular chart? Because this particular video is to understand what you can see on your screen, so that when you open your trading view, you're not like, what exactly is here, where do I start from, and all that. So if you pick any pair, if you're trading crypto, this is BTC. That's the guy. This is BTC, right? You pick the pair, if I'm on the daily time frame, it means each candlestick took about 1 full day to form. So this is yesterday, right? While this is today. Easy. You can see how will you know the date? Just look down. This was yesterday. This was today. On the 4 hours, it means each one took how many hours to form? 4 hours. So it's as easy as that. All right. Okay, I think I should go ahead to explain what time frame is for now. I think I basically covered everything on this chart. This basically shows you the price. That's basically what you will need on this chart. Your watch list tells you, these are the pairs or the currencies or the coins you want to watch. That is, you want to keep on your tab. You don't want to have to search for them every time. So when you just need it, you just click on it to go to it and watch what the market is currently doing. This is the last price. They change by price, they change by percentage. This particular place, this is your alert. For instance, I have an alert here saying that if the price comes down, that's on the 15th time frame though. You might not understand what is going on, but so I'm looking out for the fact that if the price in case the price comes down, clears this liquidity and comes down back to this POI, I should be alerted on my Gmail so that I can pick the trade and ride with it. Do you get? So that is what that particular alert is for. The other things there, not really useful like that, where you can chart. So that's by the way. Alright, so let me explain something very vital, which is the time frame. I said I was going to explain towards the end of this video, and I think I'm currently at that point. Alright, yeah, I'm currently at that point. So I've explained what time frames are. time frames, this is the box for it. Each candle is corresponded to each time frame. Do you get what I'm saying? Each candle is corresponded to each time frame, and so each candlestick explains how much time it took at a particular time frame for that candle to be formed. So before I go ahead to explain what the time frames are and how traders basically think or use the time frame, you should have asked what exactly is how are the candlestick formed, right? Because they don't just appear out of the blues. They actually formed. Now, how are they formed? Which is what I'm going to explain now. So think about it like this. I was trying to draw something the other time. I don't know if you could get it. I was trying to draw a particular graph where I drew something like this. Let me draw it again. I drew something like this, and I was saying, okay, price per day, right? For instance, the price of a milk, I changes per day. Now, each candle is formed as, let me call it like an emotional representation of traders' decision. Let me repeat myself. Each candle forms or basically shows you the representation of the traders, everyone trading, all of us trading, both the retailers, banks, institutions, government, edges, and all that. All of us, big guys, the whales. Each candlestick shows us our decision. So let me tell you what that means. That means that at this particular point, look at it. I've not explained the bullish and the bearish candle, but I can use this video to explain. I think I have though. You can check other videos, but let me also explain to this video. So on this particular video, on this particular chart, right, I've configured my candlesticks to a different color. Normally it's usually supposed to be green and red. Green means the price is buying, obviously green. Red means there's danger, that means it's going down. But I've configured mine to be green and black. So whenever I see green, I know that okay, it is buying, that means the price is going up. When I see black, I know that it is coming down. That should be easy. In other people, it can be different colors. You can change just to different things. The settings is right here. I don't think I'm going to go into that today though. But the settings is right here, you can see. So you can change the body. I can change the body to be red. Let me show you. As you can see, I can change the body back to red. So red means the price is going down, right? Green means the price is going up. So you can easily change. You can easily affect anything. Do you get? I think I would explain that later, probably, or I'll just show you how mine looks so you can copy or anything. Do you get? All right. So that's by the way. So I said each candle shows or represents the decision of every trader. Right, it represents the decision of every trader, it represents the emotion of every trader. So that means at this particular point, the majority of the traders were going to, let me use this please. At this particular point, the majority of the traders got to this point and they decided not to buy this particular pair again. Are you with me? Rather, they decided to sell, and that's why we had this massive sell. This is probably because of a news or because of any other thing, but it doesn't matter. This black or this bearish move, bearish means it's going down, bullish means it's going up. So this bearish move means that sellers came into this market and decided to sell this. They got to this point, buyers tried to buy it back up a little. That's why you can see this green. But on the 4 hours, which is the time frame we are in currently, sellers said no, they still sold it down to this point. Buyers tried buying back up, sellers were still in control of the market, they sold down to this point. So what does technical analysis, or what do we do when we analyze the chart? Basically, we are trying to think like the majority of the traders think. Now, let me make this clear. Market does not respect what you exactly think. Market just follows what does the multitude say. So you have to be able to think like everybody and also follow previous chart patterns. I'll get into all that later in much more later videos. Currently, at this point, buyers became active in this market. Now, because the 4 hour time frame, you can see much more. If I go down to the daily time frame, you see that the candles will reduce. Exactly. Now it is much more structured. So on this place, sellers sold down to this place, buyers bought back up. They were still price for fighting. They sold down again, buyers bought back up. So in analysis, we are just trying to think like every trader. We are trying to think like the majority of traders. We are trying to follow news. That's why trading is a skill. You've got to learn it. It's not difficult, definitely, but you've got to be able to learn. Sit down and learn. So at this point, from this place, buyers got involved, or buyers gained momentum and started buying the market. That's why we had this candle, this daily candle. Right? See, started having this daily candle. Now, so why did I go into all that? So yeah, I said each candle represents the emotions or the decision of the trader, or the majority of the trader at that particular point. Do you get? And like I've also mentioned before that there is what we call previous price movement. So for instance, let me show you something. It's not supposed to be part of this video. It's even more like an advanced class rather, but it's not. It won't hurt, right? So let me show you something. If, for instance, I can see this chart, right, and then I see this as, oh, at this point, who got involved in this market for it to go up? It cannot be sellers, it's buyers. So if at this point I see that buyers got involved in this market, and they bought the market, they bought price, they bought this particular point, it means that probably, obviously I've said nothing is certain, but probably from this particular point, right, buyers will most likely come in again to buy, and that's what we seem to have. Right, look at it. After this particular sell, this particular candle, I said this particular candle was the last sell candle, right? Now when we get to market structure and candlestick patterns, which will probably be in the next video, I'll be explaining. So it is when you get to this particular point, I'm expecting buyers to also get involved and start buying. And look, that's exactly what seems to be going on. I'm using the word seems to be going on because nothing is 100% certain. Do you get? But that is how we analyze. I mean, one of the ways though. So I'm predicting that when the sellers get back to this point again, buyers having bought from that same point realize that, oh, I think we should be able to buy from here, and start buying. Do you get? Now we do this. Okay, I was going to explain the different time frame and top-down analysis. So now we do this on the different time frames we have, which is I'll call it the safest way to trade. So one of the common mistakes that beginners usually make is that they just go to a particular time frame. Let me take the 5-minute time frame now, where there is 5 minutes is even so much worse because there's a lot of noise. There are a lot of movements in the 5 minutes. I mean, things happen in 5 minutes, so there's a lot of noise here. So some clumsy traders will go into this 5-minute time frame and start looking to take longs or shorts, whereas you are supposed to start from the overall. Look, let me give you an example. Imagine that you are looking at the world from space. Please just imagine with me, right? Imagine that you are looking at the world from space, or from the from a plane. Now what are you doing? Imagine you're looking down. Let me assume you're looking at it with an instrument that can zoom in and out. What are you doing? You are looking at it from a top view. Now it is said that the top view actually should be the best way to look at something in the overall form. Do you get what I'm saying? In that way you can have the perspective from the top, rather than just speaking from the side or from the bottom and just claiming, no, you have the overall view. No, when you look at it from the top, you can say, oh, this is the overall view of the particular land. For instance, if you're into construction, you don't just claim to stand in one place on the land and then you have covered the entire land. There's also what we call the top view, where you can say, oh, this is exactly the span of the entire land. Then you can zoom in down to where you want to build or whatever. Just follow my analogy. So basically, what we do, or what I do as my trading pattern, is to do a top-down analysis. Now, top-down analysis means I start from something like sometimes the monthly, as far back as the monthly. So if you follow what I've said so far, each candle here will be what? Will be a full month. It took a whole month for this particular candle to be formed. I shouldn't have been covering the day. So it took a whole month. So this is June 2025. This is what? This will be July, August, September, October, November, December, January, February, March, April, May, June, and we are currently in July. So it took, each candle here takes a month. So sometimes or many times at the beginning of the month, what do? I come down to the monthly time frame and look at what exactly did the last month do. For instance, let me use this now. The last month now was bearish. I already said bearish means sellers were active and the candlestick is going down. So last month was bearish, right? Okay, I say okay, last month was bearish and there's a break of structure. Basically means, this is advanced, basically means sellers finished the last month much more prominent. Now it could mean different things. This is not an analysis video. So what do I do again? I go down to the weekly time frame. Okay, that means each candle here is formed for 1 week. I check my analysis, apply whatever confluence I know to apply, take my trade. I go down to the daily time frame. I would have explained all that in this video, but that's not what this video is about. But that's exactly the best way to take your trade. So that means from the monthly time frame, you are saying that if sellers were involved, were more prominent in the last month, you are careful not to just start buying the market, right? Because sellers could continue to be involved. The only way you can start buying is if in your analysis, for instance, in this place, I see a break of structure. So I know that this month is most likely going to go back into this particular POI before sellers come down to take out this draw on liquidity or this particular one. So the initial draw on liquidity, this is an advanced topic, but the initial draw on liquidity will be this place. So in this month, I'm expecting buyers to be much more active to take this one out at the very least before coming down to sell. I'm just showing how I take my trade. Now, because I know that I'm expecting a little buy before a sell, I'll be careful, right? In that particular month, I would have marked out my limit. I mean, where I want the market to buy to. Now I come down to the weekly. I check again. Buyers are still involved. They are still buying into this place. Okay, I know that in anything I'm doing, I must not sell. I'm buying. I come down to the daily. Oh, okay, in the daily, it's as though yesterday sellers finished, but today buyers started buying. So that's the safest way to analyze and take your trades. Now, this is not a concise explanation. Actually, this is not a very concise explanation, but just to give an idea of how traders think. I mentioned that this video basically is to understand the chart. So you are basically in this video to see, okay, how do traders think, at the very least, on what do they see. So today you've learned what candlesticks are. You've learned that candlesticks are a representation of each trader's decision and emotions. Sometimes they can just be a news that, the dollar is about to fall and everybody goes ahead to sell, and that's why sometimes you see massive sales. You just see one long candle go like this, poof. Do you get? That's why you also pay attention to news. Do you get what I'm saying? So there are different traders for different time frames. Let me mention that as I end this video. Now, for instance, we have what we call the scalpers. Scalpers, like the word implies, are people that like to take it in small pieces or like to take small trades or quick trades. Let me use the word quick trades. And for you to take quick trades, because if this whole candle took a day, scalpers don't want to wait the entire day before their trade activates or before they get their profits, right? So scalpers will use things like 1 minute, 2 minutes, or 5 minutes. Basically, from 5 minutes downward is the scalpers terrain. So that means if they take a trade like this now, they're expecting the trade to actualize in the next 1 hour or less. Do you get? I mean, let me give you an example. Let me assume that because of this particular break of structure here, right, a scalper said, when the market gets here, because it's bought from here, just like I explained before, when the market gets here, you should buy again. And look at what happened. The market gets here and it starts buying again. The scalper has entered this trade, and look at how long it took. Where is it? There's my dates. So there's also a tool. I mentioned some tools for for your trading analysis. So this is a date tool where to show you the date range. So let's check the date range here. Check the date range. It just took 13 hours 10 minutes for this trade to actualize, whereas that's a scalper. This is even less than what a scalper even does way less. Do you get? But just to explain what the scalper does, the scalper is looking for a quick trade on the 5 minutes downward. Now, so in seconds to minutes, the scalper wants to get into the trade and get out. Now, there are those we call day traders. Day traders are those that use the minutes to hours. Day traders basically trade from the, let me assume, 4 hours down to the 15 minutes. So day traders, they check the daily, their confluence. Confluence means their bias, their hedge, their reason for taking a trade. They pick it from most likely the 4 hours. So they go to the 4 hours. Oh, they see that on the 4 hours, when buyers got to this place, they sold a little bit. It went up again. This would be a break of structure for the advanced guys. It came back again. It went up again. So what is a buyer's assumption? Just like you can see my current trade going. A buyer's assumption is that a day trader assumption is that when the market gets to this particular point again, because it has bought from that particular point, it should buy again. And that's exactly what market is doing. Right? That's exactly what market is doing. It's currently buying again. Right? Then we also have the swing traders. The swing traders are those that trade the daily time frame. Why are they called swing? I called swing because it takes longer. So for the scalpers, under a day, they've gotten their profits. They are going to make profits under a day at most. Do you get? At most, sometimes it's even in hours. Do you get? For the day traders, sometimes it can take 2 days. When did I take this trade? I think I took this trade, was it? Let me see. Take them 2 hours time frame. This should be on Monday. Was it Monday? Yeah, it was on Monday. So I took this trade on Monday and today is Wednesday. That's not 18 TP yet. So that's how it works. So obviously I don't scalp trade. I think I have before, but currently I don't scalp trade. I'm a day trader. So swing traders don't mind their trades. Swing traders take their trades on a higher time frame. They usually use the day to the week time frame, right? The 1 day, the 2 day. Don't forget I showed you there are different days. So they use the 1 day. Okay, I think the 2 days is usually on the premium version. So that means each candle here took a full day to form, right? So what's it called? A swing trader is saying, oh, if price sold at this point, I'm expecting that in the next probably 15 days, when price later come here, it sells. I'm going to tell the preferable day to trade as a beginner at the end of this. Now, the last kind of traders we have are position traders, and these are the whales, the big guys. These ones, they trade the weekly time frame down to the monthly time frame. Why? Because they don't like the noise that the lower time frame has. So if you see the 5 minutes time frame, there's a lot of noise, there's a lot of movement. You get price can easily eat your TP immediately, you take profit, and also eat your ASL immediately. Same thing even with the day trades, right? You can easily eat your TP under 2 days, 3 days. Within a week, you have made your money. For the swing traders, it takes longer time. For the position traders, it takes months. Do you get? They know that, oh, last month or last 3 months, price sold from this point. They're expecting that when price gets here again, just like it just did, it's going to sell again. Did you get? Oh, when price got to this place, it sold. They're expecting that when price gets here again, it sells. Now, the day or the month it took between this one to this one, look at it. If you can, let me zoom in there. For 3 bars, 1,308 days. Do you see? And it makes sense. Why? Because if each candle here is a month, I mean, this is 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, 7 months, 8 months, 5. Do you get? So for before price will come back to this place before selling again, the position trader just puts his position there and just forget. I can't even say he's waiting, he just forget. And they make their money. They are the big guys. We don't have, we the retailers, we don't have such patience. I don't think I want to wait a full year before my trade actualizes. Do you get? But it's safer for them because it has lesser noise and is much more probable. But for retail traders, you just have your $50, you just have your $100. You can't be waiting a whole year. Do you get what I'm saying? You want to make your profits within a day at most, or within a week. So now if you ask, oh Shay, which day is the best day to trade? Depending on the kind of trader you eventually become. So at the beginning of learning how to trade, you would have to also pick the kind of trader you are, and it depends on your personality. That's why I said trading is a skill. So you have to work on yourself. Are you someone who is quite greedy? Are you someone who wants the quick cash? Are you someone who can be patient? Are you someone who can watch your trade or your profits run? Profit means, oh, let's say you predicted that the price would get. Let me show you. For example, look at this trade now. In this trade, my take profit is at this point, but price has got to this place before. I can decide to close the market at this point and say, oh, I can't wait. Now, when price was coming down back, I don't know if you understand what I'm saying. When price was coming back again, I could have been afraid and closed the trade that, oh, I don't want the price to come and take me out because this is my SL. So you have to, there's a lot to learn, a lot of psychology also to learn. I'll be talking about that in another video entirely. There's a lot of psychology to learn. So the kind of trader that you are going to be will depend on your personality, depend on how you've mastered yourself. Do you get what I'm saying? How have I mastered myself? How am I able to act under pressure, not to allow the fear of losing out or the fear of missing out, get to me, right? But for a beginner, I would advise, based on my advice, that you are a day trader. That means you trade at least from the 4-hour time frame down to the 15-minute time frame. So on the 4-hour time frame, you used to get your structure. That is, you used to get, oh, where's the price heading to, right? Then you can execute probably on the 1-hour time frame where you see a clear order block like this one. I'll talk about order block. That is, oh, this is the last place where sellers were involved before a buy. Or you can also come down to it depends on where you see your structure from. If you come down to sometimes if you come down to the 15-minute time frame to take your trade, you might miss out on the trade because where you eventually place your orders, price might not get to it. Imagine I've placed my order somewhere like here. Imagine I place my order somewhere here. But price even actually got to it. So there is that. So, and there's what we call refinement. I want to explain that in this particular video. Alright, so that's basically how this works. Understanding the chart, understanding what candle is or what candles are, understanding how traders show their emotions. It's just this. It's just all you are seeing here. All this thing you are seeing here is emotions. It's traders' bias, traders' prediction. Right? It's not magic. Do you get? So, and you're also there as a trader predicting like every other trader. Your prediction also matters. Although those with bigger funds and bigger capital, their prediction will definitely be higher. So don't make the mistake of just trading on one particular chart and one particular time frame. As you just come to the 1 hour and you pick your trade. No. My best advice for you is to do a top-down analysis. Check, at the very least, what's the daily time frame saying? Where is the candle going on the daily? What were the traders' agreements, right? See it as a marketplace. What was the price agreement yesterday? Oh, it ended bullish. That means today might probably end. Oh, it broke structure yesterday. That means you should have a reversal. Okay, those are the things that you need on the journey. Like I've said, every time you come here to watch a video, you do well to put some things down. I mean, if you are learning and if it's a skill, I'm sure that you don't think your head can take everything at once. Right, and thank God it's a video you can always go back to, save and watch. So another mistake you should not make is just trying to follow every candle move. Oh, you see that, oh, this thing is selling, you just enter the trade. That will be later on though. you just enter the trade and you want to sell. You might be lucky to sell to this point, but if you don't close your trade at this point and you say, oh, you still want to be selling, downward, before you know, buyers entered and poof, you're out. So it's not just you entering at any price, it's you actually deliberately checking the charts. That's what you have to understand. Checking the chart, checking what the price is saying, checking where the price is headed on the higher time frame, following the analysis, also not neglecting the fundamental analysis, which is the news. Or is there a news coming up? I think in my videos I usually show Forex Factory, where I basically check my news. Oh, which news is coming up today? Oh, there's a news by 1:30. I think that's what is even currently going on. The one that price is currently bullish. So there's a news by that time. All right, how is it going to affect the market? What's the prediction and all that? So all that is what trading is about. All that is what understanding chart is. So in my next video, I'll be making a video about candle anatomy rather, which is the fact that I'll be explaining not necessarily candlestick patterns, but what the candle is about. So for instance, as you can see this candle, there's a long thin line, there's a short thin line, there's a long thin line, there's a short thin line. So I'll be explaining all that, and probably in that same video, in another one, I'll be explaining what these long thin lines are, how does it influence the market, are they just random or they are deliberate. If you can take a good guess, you definitely know they're not random from what I've said so far. So what is this? We call it wick, we call this the body and all that. So I'll be explaining all that in the next video I'll be making. So stay tuned to the channel. If you've not subscribed yet, this is the best time to subscribe, so that you can get and put your notifications on, so that you can get notified of more videos and follow through with the lesson. Also like this video so it can have much more reach and more people will get knowledge by it. All right, take care of yourself. The voice is the voice of God did, and I say God bless. Toodles.